US has imposed tariffs on import of 1 kg and 100-ounce gold bars.
Were you surprised to see tariffs, Trump taxes, if you will, on gold?
Yes, I was.
Now, much of this import that US does comes in from Switzerland. And remember, there is a 39% tariff that you have on Switzerland right now. Gold, and it's at all-time highs, but for all wrong reasons this time around. It's tariffs yet again, and that really seems to be leading to disparity now.
The U.S. debt market is burning red. The auction of 30-year U.S. Treasury bonds failed to attract enough buyers, pushing yields to their highest levels in more than a decade. Prices for all goods are rising and will continue to rise, since Donald Trump has come up with a new tariff. I'll tell you now. Mortgage rates, car loans, and credit card interest rates are all on the rise. And while that's happening, Donald Trump has just targeted one of the oldest and most reliable safe haven assets in history, gold. The new 39% tariff on gold imports is shaking up global markets and providing China with a golden opportunity. Subscribe now, because what you're about to hear could reshape the dollar's role in the world. Let's break it down. Gold in the crosshairs. Gold has always been the go-to hedge against inflation and currency risk. But Trump's 39% tariff on 1 kilogram and 100 ounces gold bars is a direct hit on that safety net. In 2024, the U.S. imported $16 billion worth of gold, mostly from Canada, Switzerland, and Australia. Now, those imports just became far more expensive. As a result, gold futures in the U.S. have hit record highs, with a massive $120 per ounce gap over the global spot price, the biggest in years. Americans are now paying hundreds more per bar than buyers in Singapore or Dubai. America's borrowing crisis. For decades, the U.S. has relied on steady demand for its bonds. But in the latest auctions, investors stepped back. The 30-year yield hit around 4.9%, the highest since the mid-2010s. The 10-year, the benchmark for most loans, climbed above 4.2%. That means everything from mortgages to credit card rates is getting more expensive. To keep the government funded, the Treasury is selling record amounts of short-term debt, $100 billion in 4-week bills this week alone, more than double pre-2020 levels. It's like paying the rent with a payday loan. It works until interest rates spike. Tariffs backfire. Tariffs are sold as a way to protect American jobs, but they often come back to hit the economy. When Washington raises import taxes, other nations retaliate, buying less from U.S. companies and shifting trade toward rivals like China. In 2025, big buyers like India, Brazil, and South Africa are strengthening BRICS ties, replacing American goods with cheaper alternatives. That means fewer contracts for U.S. farmers, factories, and exporters. Ripple effect for savers and investors. Higher costs on wholesale gold will spill over into coins, jewelry, and collectible bullion. Even small investors buying gold eagles will feel the pain. Meanwhile, China is moving in the opposite direction, ramping up gold purchases for both private investors and central bank reserves. Since early 2023, Beijing has added over 300 metric tons to its holdings. A gift to China. With U.S. demand falling, more global supply is flowing east, often at discounted prices. This strengthens China's role in gold pricing, shifting market influence away from U.S. exchanges like COMEX and toward Asian hubs. At the same time, BRICS nations are exploring gold-backed trade settlements to bypass the dollar. If China boosts its reserves while America limits access to gold, the balance of global financial power tilts sharply. The overall picture, rising debt costs, declining trade, and the influx of gold to America's competitors all point to one thing: the dollar's dominance is under threat. And it's not just about markets, but also about power. Whoever controls gold reserves and global prices has leverage in the event of the next financial crisis. America is very much at risk of losing the dollar. Final warning: every lever pulled to keep the U.S. economy afloat adds more pressure somewhere else. At some point, something breaks, and when it does, the impact won't stay on Wall Street. It will hit every paycheck, every savings account, every grocery bill. Subscribe now and turn on notifications. In our next video, we'll uncover the hidden BRICS plan to turn gold into a direct challenge to the dollar.